In recent weeks, global attention has shifted toward a series of financial decisions made by China. Moves that appear subtle on the surface, but carry far deeper strategic meaning beneath them. The reduction of China's U.S. Treasury holdings, a process that has been unfolding gradually over time, is now being viewed as part of a broader plan rather than an isolated adjustment to market conditions. For years, China held one of the largest reserves of U.S. government debt, and this position gave it significant influence in global markets. Yet, the slow but consistent reduction in these holdings suggests that China no longer sees value in remaining heavily tied to a financial structure dominated by the United States. Instead, it appears to be shifting toward a model that emphasizes economic sovereignty, reduced exposure, and greater long-term stability in the face of global uncertainty. This development has raised questions among analysts who have monitored U.S.-China economic interactions for decades. Many experts initially believed that China maintained high levels of U.S. debt because it offered predictable returns and served as a stabilizing asset for its massive foreign reserves. But as the global financial landscape becomes more uncertain, China's approach has changed. The country now seems to prioritize minimizing vulnerability rather than maximizing short-term benefits. By reducing reliance on U.S. Treasuries, China is reshaping its financial foundation in a way that limits its exposure to external pressures, including sanctions, market volatility, and shifts in monetary policy that may not align with its own national interests. These actions signal a deeper recognition that global power structures are evolving and that economic influence in the future will belong to nations able to operate independently without depending heavily on foreign financial instruments. At the same time, China's shifting financial posture reflects a broader pattern of internal recalibration. The decisions being made today are not reactions to single events, but are instead part of a long-term and highly deliberate strategy designed to prepare the country for structural changes occurring around the world. As the global economy undergoes transitions driven by technology, politics, and shifting alliances, China appears determined to ensure that it is not caught off guard or left vulnerable to decisions made elsewhere. This strategic foresight is becoming more visible as China strengthens alternative financial mechanisms, builds stronger trade networks, and looks inward to support domestic industries that once relied heavily on foreign support. Reducing U.S. Treasury holdings may be only one part of this process, but it is a powerful indicator of China's intent. The move also highlights China's growing confidence in charting its own course, free from the constraints of traditional financial norms. For decades, international expectations revolved around the idea that major economies would remain interconnected through shared financial systems, and any shift away from these systems was considered unlikely. However, China's actions challenge that assumption. By stepping back from heavy participation in U.S. debt markets, China is signaling that it no longer views dependence on external frameworks as a requirement for stability or growth. Instead, it is constructing a financial path rooted in self-determination, one that places long-term security above the short-term advantages of participating in established structures. This shift does not indicate a sudden break, but an ongoing realignment that has taken shape quietly and methodically over several years. While many observers see these moves as purely economic, the underlying motivations reveal a multidimensional approach. China recognizes that financial influence and technological capability are deeply intertwined in modern geopolitics. Dependence in one area can create vulnerability in another, which is why China appears committed to strengthening both fronts simultaneously. The reduction of U.S. Treasury holdings reflects a desire to prevent economic dependencies from limiting national decision-making. It is a step toward ensuring that China can operate with greater freedom, especially as global tensions fluctuate and new pressures emerge. This approach positions China not as a passive participant in global affairs, but as an active player shaping its own economic architecture. In the broader context of China's long-term strategy, this financial shift marks a significant moment. The pattern of gradual detachment from U.S. Treasuries suggests that China is thinking decades ahead, anticipating scenarios where reliance on foreign assets may pose risks to its own ambitions. The steady, measured pace of these reductions shows a calculated effort to avoid market disruption, while still sending a clear message about China's evolving priorities. Each adjustment adds another layer to a foundation designed to withstand external economic shocks, geopolitical shifts, and global instability. And as China continues refining this approach, the effects are beginning to reshape global discussions on financial power, stability, and future economic directions. Alongside China's financial adjustments, another major transformation is unfolding within the country's technological landscape, one that is drawing global attention and challenging long-standing assumptions about how the semiconductor industry would evolve. For years, China was viewed as a participant that relied heavily on foreign equipment, foreign expertise, and foreign approvals to advance its technological ambitions. Many believed that China's limitations in chip manufacturing would prevent it from closing the gap with established global leaders. Yet the developments emerging from within China over recent months paint a very different picture, suggesting that the constraints once thought unbreakable have instead fueled a period of intense reinvestment, innovation, and self-reliant growth. China's technology sector is undergoing a transformation that is both broad in scope and deep in strategic significance. This shift becomes even more visible when examining how Chinese companies have responded to the challenges they faced. Early restrictions on high-end equipment created an environment where firms were forced to rethink their production methods, redesign their development processes, and seek solutions domestically. Instead of slowing progress, these barriers became catalysts for accelerated innovation. Major Chinese semiconductor firms stepped up efforts to expand their research capabilities, recruit top-tier engineers, and refine manufacturing techniques that once depended on imported tools. The momentum created by this domestic push shows how rapidly the industry has adapted to its new reality. China's technological progress is no longer tied to external permission or international collaboration in the same way it was before. It is being driven by a determined effort to build internal strength. One of the clearest signs that this transformation is gaining traction is the reaction from major US and chip manufacturers, companies that have historically dominated global supply chains and enjoyed a strong presence in the Chinese market. Over the past year, several of these firms have acknowledged increasing difficulties in maintaining their competitive advantage in China. Their statements and reports indicate that the rise of capable domestic Chinese suppliers has altered market dynamics in ways that were once considered unlikely. These American companies depended on a position where Chinese buyers had limited alternatives, but the emergence of localized solutions has changed that balance. As Chinese firms improve the quality and reliability of their products, foreign companies are facing competition from a source that was previously seen as a customer rather than a rival. For U.S. chip giants, this shift introduces a series of challenges that extend beyond the Chinese market itself. Their global operations were built on assumptions about demand, market access, and technological superiority. But the rapid improvements happening inside China are reshaping those assumptions, forcing these companies to reconsider strategies that once felt secure. They now face increased uncertainty about how future sales will unfold, how deeply Chinese competitors will influence global pricing and availability, and how quickly this technological momentum might spread beyond China's borders. Each quarter brings new indicators that China's industry is strengthening at a pace that will continue to affect global supply chains and competitive dynamics well into the future. The implications of these changes extend far beyond the semiconductor sector. China's broader technological push reflects a national effort to build resilience across industries that once depended heavily on foreign inputs. In the past, reliance on external tools created vulnerabilities that could be exploited through export restrictions or geopolitical pressures. But now, as China demonstrates an increasing ability to produce key components domestically, those vulnerabilities are shrinking. Each advancement in chip manufacturing reinforces the country's long-term strategic goals, reducing dependence, increasing bargaining power, and ensuring that its technological development cannot be easily halted or influenced from the outside. This evolving landscape also demonstrates how closely China's financial independence and technological independence are connected. Just as reducing U.S. Treasury holdings protects China from financial exposure, expanding domestic semiconductor capabilities protects it from technological exposure. Both efforts serve the same purpose: safeguarding national priorities and strengthening the country's position in a world where competition is growing more intense and more complex. China's leaders understand that long-term stability requires strength in multiple dimensions, and they are building that strength systematically, one sector at a time, one initiative at a time. The combined effect of these efforts is creating momentum that is difficult for global observers to ignore. China is establishing an environment where progress is driven by internal capability rather than external reliance. The core message emerging from these developments is clear. China is preparing its economy and its technology sector for an increasingly competitive international landscape. Through strategic adjustments, steady investments, and consistent long-term planning, the country is laying the groundwork for an era where it can compete more effectively, operate with greater independence, and shape global developments with more confidence. As China's semiconductor sector continues gaining strength, the consequences are becoming increasingly visible across global technology markets. The rapid improvement of China's domestic chip design and manufacturing capabilities has prompted international companies to reassess long-standing strategies that once felt unshakable. For years, multinational corporations operated with confidence based on the assumption that China would remain dependent on them for advanced semiconductor technologies. This belief shaped investment decisions, supply chain planning, and the overall approach these companies used to maintain their competitive edge. But the progress happening inside China is steadily overturning those assumptions, forcing global players to recognize that the technological balance is shifting in ways that directly affect their future. Industry analysts who have monitored the semiconductor landscape for decades have noted that China's advancements did not happen suddenly. Instead, they are the result of coordinated efforts involving substantial investment, large-scale talent development, and a renewed focus on overcoming key technical barriers. Chinese research institutions and major domestic tech firms have dedicated enormous resources to strengthening foundational technologies, steps that are essential for closing the gap with global leaders. This methodical buildup demonstrates how seriously China views the semiconductor sector as a strategic priority. Every improvement, even small ones in efficiency or design, contributes to a broader system of growth that compounds over time. These efforts reflect not just ambition, but an understanding that semiconductor capability is central to national resilience. The impact of these developments is deeply felt among U.S. chip makers that once played a dominant role in the Chinese market. Traditionally, these companies benefited from China's reliance on their tools, designs, and intellectual property. Their presence was supported by strong demand and limited competition from local firms. However, as Chinese companies become more skilled and more confident, this environment is changing. Reports from the industry show that several U.S. chip manufacturers have acknowledged challenges in maintaining their influence. What was once viewed as a stable revenue stream is now a competitive battlefield, where foreign companies are struggling to retain the same level of access and control they enjoyed for years. The shift in market dynamics has been especially noticeable as Chinese firms improve their ability to replace imported technologies with domestic alternatives. Even if the local products do not always match the very highest global standards, their rapid progress and expanding capabilities pose direct challenges to international suppliers. For U.S. firms, this change introduces questions about long-term strategy, investment priorities, and market forecasts. They must now reconsider assumptions about future demand from China, how new domestic competitors may impact pricing, and how global supply chains will adapt to the growing presence of Chinese technology. These uncertainties have created a sense of urgency within the industry, as companies realize that the window of guaranteed dominance may be narrowing. Meanwhile, inside China, the momentum behind this technological rise continues to build. The country's tech ecosystem is evolving into a more self-sufficient structure, supported by increasing government backing, a strong emphasis on local innovation, and a growing workforce skilled in high-tech manufacturing. These elements work together to fuel rapid advancement and reduce dependency on foreign suppliers. China's response to earlier restrictions on chip technology illustrates an important pattern. Rather than slowing progress, external pressure has accelerated domestic innovation. The industry has become more adaptive, more determined, and more capable of achieving goals that were once considered out of reach. This growth has created ripple effects beyond the semiconductor sector, influencing global perceptions of China's broader technological ambitions. Countries and corporations around the world are now paying closer attention to how quickly China is moving and how significantly its progress could reshape global markets. The development of a strong domestic semiconductor ecosystem enhances China's strategic position, giving it more control over essential components that power countless modern technologies. This control translates into greater resilience and reinforces the nation's long-term objectives of technological independence and secure supply chains. For the United States and its major chip makers, this changing landscape poses complex challenges. Their historical advantages allowed them to operate from a position of dominance, but the rise of China's domestic competitors means they can no longer rely on the same strategic assumptions. As more Chinese companies reach levels of capability that reduce the need for foreign suppliers, U.S. chip makers face difficult decisions about how to adapt. Their concerns are not limited to the Chinese market alone. What happens in China's semiconductor industry influences global pricing, competitiveness, and the overall balance of technological power. These developments highlight a period of transition, one in which established players must adjust to emerging realities. China's expanding capabilities have introduced a level of competition that is reshaping global expectations. The The semiconductor industry, long driven by a small group of dominant suppliers, is now entering a new phase where additional players are becoming increasingly significant. And as Chinese firms continue strengthening their position, the global industry is forced to reconsider long-held assumptions about leadership, market dynamics, and the pace of technological progress. China's evolving financial posture and its accelerating technological advancement are shaping a new reality that the global community can no longer ignore. The gradual retreat from heavy reliance on U.S. Treasuries, combined with its rapidly strengthening semiconductor capabilities, shows that China is carefully restructuring the foundations of its long-term strategy. This transformation is not accidental and not driven by short-term pressures. Instead, it reflects a deeper recognition that future geopolitical and economic landscapes will demand greater independence, resilience, and internal strength. China's leaders appear to understand that depending on external systems, whether financial or technological, creates points of vulnerability that can be exploited in times of tension. By minimizing those weaknesses, China is creating a more stable platform from which it can pursue its ambitions with fewer constraints. This broader strategic direction becomes even clearer when examining how China has coordinated its economic and technological decisions. The reduction in U.S. Treasury holdings signals a deliberate effort to insulate the country from financial structures that might limit its freedom of action. In previous decades, China's participation in U.S. debt markets was seen as mutually beneficial. The U.S. gained a reliable buyer for its government bonds, and China gained a relatively stable asset for its foreign reserves. But as global tensions rise and economic competition intensifies, China has reassessed the long-term risks of holding such a massive amount of debt tied to another nation's monetary policy. This reassessment has led to gradual but consistent adjustments that reflect a desire to secure greater financial autonomy. At the same time, China's progress in advancing domestic semiconductor production reflects an equally important phase in its strategic evolution. Technology sits at the heart of modern global power, influencing communication, defense, infrastructure, commerce, and innovation. Recognizing this, China has worked tirelessly to build an internal ecosystem that reduces dependence on foreign suppliers. The ongoing expansion of domestic research capabilities, the rapid development of local manufacturing processes, and the rising skill level within China's technology workforce all demonstrate a coordinated push toward long-term technological sovereignty. These developments show that China's leadership understands that real strength comes from controlling the systems that power the digital world, not from relying on others to supply them. The significance of these dual developments, financial independence and technological independence, reaches far beyond China's borders. As China continues on this path, other nations and industries are being forced to reevaluate their assumptions about global stability, competition, and influence. For years, many believed that China's growth relied heavily on existing international structures. But recent decisions reveal a country preparing for a future where it expects to shape those structures, not simply participate in them. This shift has spurred discussions among global analysts who are beginning to recognize that China is working to position itself as a central force capable of weathering economic pressures, technological challenges, and geopolitical uncertainties. This trend is further emphasized by the growing confidence within China's domestic industries. Firms that once hesitated to take bold steps due to fear of foreign restrictions or supply disruptions are now operating with a renewed sense of determination. They are increasingly able to rely on homegrown innovations rather than external support, and this shift has strengthened their ability to compete at home and abroad. As financial and technological independence grow, so does China's ability to influence global markets. This expanding influence does not manifest through sudden dramatic actions, but through steady, deliberate progress that gradually alters competitive dynamics. In many ways, these developments reflect China's long-term approach to strategic planning. Rather than responding impulsively to external events, China has built a reputation for thinking years, sometimes decades, into the future. This patience is evident in the way it has handled financial restructuring and technological development. Each move is part of a broader vision aimed at increasing stability, expanding capability, and positioning the country for enduring influence. As a result, China is gaining the ability to navigate global shifts with far greater freedom, reducing the extent to which external forces can dictate its economic or technological direction. The ongoing changes inside China indicate that the world is witnessing a nation in the midst of a profound transformation, one that is calculated, structured, and aligned with long-term national objectives. This transformation is not defined by sudden breakthroughs or dramatic announcements, but by gradual adjustments that accumulate over time. As China continues strengthening its internal systems, the gap between its current capabilities and its long-term goals becomes smaller. And as that gap narrows, the implications for global competition grow more significant. As the trajectory becomes clearer, China's financial adjustments and technological advancements together reflect a broader effort to build a future in which external pressures hold less influence over its internal decision-making. These shifts show that the country is preparing for conditions where resilience is the key to sustaining growth. The slow and steady reduction in exposure to foreign-controlled systems, combined with the strengthening of domestic capabilities, illustrates a long-term plan that prioritizes stability over convenience. China's ongoing transformation suggests that it is moving toward a position where it can navigate challenges without depending on structures shaped by others. This direction indicates an evolving strategy that is guided not by immediate fluctuations, but by a calculated understanding of global trends. The steady evolution of China's internal systems signals a nation reshaping the boundaries of what it can control. Within the financial sector, the deliberate rebalancing of foreign reserves is allowing China to gradually increase flexibility in how it manages economic pressures. The goal is not abrupt change, but consistent progress. Progress that reduces the leverage external powers may hold during periods of tension. By slowly restructuring its financial exposure, China is building a buffer that strengthens its ability to maintain stability in volatile global environments. This shift forms an important part of a broader design to ensure that the nation's economic foundation remains secure no matter how international relationships change over time. At the same time, the advances unfolding within China's technology landscape demonstrate a parallel transformation. The rapid improvement in local semiconductor capabilities, the expansion of domestic manufacturing, and the growing skill set of Chinese engineers show the emergence of a technological system designed to withstand external restrictions. These developments reflect a long-term effort to cultivate an internal ecosystem capable of supporting innovation without relying heavily on imported components. As these capabilities expand, China gains more control over the industries that form the core of modern economies. This expansion is not characterized by short-term victories, but by gradual steps that collectively strengthen the nation's strategic position. As these internal developments continue, The global environment is slowly being reshaped by China's growing confidence. Nations, industries, and institutions increasingly recognize that China is building systems intended to function independently of traditional global frameworks. This recognition is prompting renewed discussions about the balance of power in areas ranging from finance to technology. Observers around the world are beginning to acknowledge that China's long-term planning is enabling it to operate with greater assurance in environments that once presented significant vulnerabilities. These shifts are not dramatic on the surface, but they are profound in their long-term effect. This transformation is further highlighted by the way China's industries are responding to the growing strength of domestic systems. Companies that previously relied on foreign components or capital are now finding stability within the nation's own expanding infrastructure. The strengthening of these internal networks encourages firms to invest more confidently in research, development, and production. As they do so, the ripple effects expand across broader sectors, creating momentum that reinforces national resilience. This evolving environment fosters conditions where long-term planning becomes not just possible, but practical. In addition, China's expanding autonomy in both the financial and technological spheres enhances its ability to shape the direction of its development. With fewer external dependencies, the nation gains greater freedom to implement long-term policies that support national objectives. This increased strategic flexibility allows China to adapt more easily to shifts in global conditions. The reduction of vulnerabilities, whether financial or technological, strengthens the foundation from which China can engage with the international community on its own terms. This growing stability reflects a shift toward a more confident and self-sustaining national posture. Viewed collectively, the developments unfolding within China illustrate an evolving strategy that emphasizes internal strength as the basis for broader influence. The combination of financial restructuring and technological advancement shows a nation building systems designed to endure, regardless of global uncertainties. These changes do not represent sudden breaks from the past, but are part of a gradual transformation that aligns with China's long tradition of long-range planning. As these shifts continue, the world is witnessing the emergence of new dynamics shaped by the country's expanding capacity for independent growth. The ongoing adjustments, both financial and technological, mark an important phase in China's development. Each step taken reinforces the nation's long-term goals and strengthens its ability to maintain stability in an increasingly complex global environment. These developments reflect a future shaped not by short-term reactions, but by deliberate and sustained efforts to reduce external vulnerabilities. As China continues to reshape its internal systems, the path ahead becomes clearer. A future defined by greater self-reliance, increased strategic flexibility, and a stronger foundation from which to respond to global changes.